we are going to talk about the accounting for other businesses enterprises in chapter 5. 8.1 Manufacturing. The definition of manufacturing account is a vital component of a manufacturing firm's final accounts. It provides both prime cost of manufacturing and overhead expenses that incurred during the production. Manufacturing account does not show any profit or losses figures. In manufacturing account, we only report raw material, factory labor, and other indirect costs that related to the production. Once the production cost is ascertained, the value will be transferred to the trading account either at cost or cost plus profit. Differences between trading and manufacturing businesses. Manufacturing businesses, it manufactures its own product to sell to customers, while trading businesses, it intermediaries between manufacturers and importers who want to buy their products. As for the determination of cost of manufacturing businesses, it has more complex processes because it needs to account for raw materials, labor, and overhead in production of finished goods. While for trading businesses, it only focuses on purchasing and selling finished goods, making cost determination relatively straightforward. Then, determination of selling prices. For manufacturing businesses, it only determined by adding profit to the manufacturing cost, while trading business, it is determined by adding profit in the purchase price. Then, element for manufacturing costs. The formula to calculate the manufacturing cost is prime cost plus production overhead. The elements in manufacturing costs is prime cost, direct material, direct labor, production overhead, indirect materials, indirect labor, indirect expenses. The definition of prime cost is expenses directly related to the production processes. For example, direct material, direct labor, and other direct expenses. While direct material is a cost of material that are used to make a product and can be directly associated with the product. For example, flour and eggs. Then, direct labor is a cost of workers who directly make the product. For example, the skilled worker involved in the production. Then, for the production overhead, it is an indirect cost incurred during the production processes. It is called manufacturing overhead or factory overhead. For example, is indirect material, indirect labor, and other indirect expenses. For indirect materials, it is a cost material used in the making a product but have a minimal cost. For example, nails and glue. For indirect labor, it is a cost worker who do not use the direct materials to build the product, but they are needed to operate the factory. For example, factory supervisors. Then, for indirect expenses, it is an expenses that incurred to operate the production but cannot be directly associated with the product. For example, factory rent. Term for loose tools is referred to small tools or supplies that are often used in the production processes. For example, hammers, screwdrivers, tape measures. Loose tools considered as overhead costs and indirect costs. It is a part of current asset. Work in progress. WIP. WIP can be valued at prime cost or production cost. WIP is valued at production cost. The adjustment for opening and closing WIP should be shown after all the prime cost and production overhead has been totaled and before production factory profit is added. What is unrealized profit? It is the profit included in the value of the closing inventory of finished goods. It means that company keeps unsold product and the profit hasn't been earned. Next topic is branch. Branch and head office. It is a businesses that open shop or branches in different regions to increase their sales and profit. The activity of branch are still controlled and monitored by the head office. There are two types of branches. One is selling agency branch, two autonomous branch. Selling agency branch is known as dependent branches, while autonomous branch is an independent branches. Then, selling agency branch is goods for resale are supplied by the head office, while autonomous branch is branch outlet that may make some local purchase for goods to be sold. selling agency branch is controlled by head office, while autonomous branch is controlled by the activities such as hiring new workers and designing of product market. From earlier, autonomous branch is an independent branch. It prepares its own trial balance and final accounts, then it sends its copy to the head office to be integrated in the head office books. Transactions between head office and branch are therefore recorded in current accounts. As for the current account, it records and tracks all the day-to-day financial dealings between main company, which is head office, and its branch. Current account is a tool to monitor the financial connection between the head office and the branch. Non-profit organization. The definition of non-profit organization is it is a non-business entity that provide facilities and services for members but it does not make any profit. For example, NGOs, non-governmental organization. The differences between profit and non-profit organization is by their purpose, funding, taxation, reporting, financial statement, and net worth. As for profit organization, their purpose is profit motive. It develop product and services that are valuable to customers, while non-profit organization is service motive by promoting a social cause for particular standpoint. For example, it is existing with basic human needs and environmental needs such as food, water, and education. As for funding, profit organization, it generates revenue from sale of goods and services, bank loans, and investment of investors, while non-profit organization, their funding is through private organization, corporate sponsorship, government grants, and crowdfunding. Next, for their taxation, profit organization must pay taxes as the law requires, while non-profit organization, they are required for tax-free fundraising because its income support and sustain services to serve for public goods. Then, for reporting, profit organization reports its performance to its shareholders and investors, while non-profit organization reports its achievement and activity to a board of directors or other government authority. Profit organization records its financial statement in profit or loss and other comprehensive income, while non-profit organization records their income in income and expenditure account. Net worth for profit organization, their profit or loss is transferred to capital account, while non-profit organization is their surplus or deficit is transferred to accumulated fund. Account of non-profit organization, receipt and payment account. It represents the summary of cash and check transaction for the financial year, while income and expenditure account, it is an income statement for non-profit making organization to find the surplus or deficit that made during a period. For accumulated fund, it is a represent a form of capital account for non-profit organization. A profit-oriented organization would have a capital account. The surplus earned in the income and expenditure account will be added to the accumulated fund, whereas deficit will be deducted from accumulated fund. Income peculiar to non-profit organization. First, annual subscription. There are annual subscription payable by members to retain their membership in social club or society. Then, for the entry fee, there are entry fee by the new members upon joining the club, social, and society. Life member subscription, there are fees collected by social clubs and society from members in return for a lifetime access to facility or services. For donation, it comes from crowdfunding such as private donation, street collection, and postal campaign. All donation must be recorded whether in cash, check, money transfer, or internet payment. Grants are available for non-profit organizations from local and federal government and also from private sector. All the money that received from this platform must be recorded in the accounts. That's all from me. Thank you.